If the thought of investing in the stock market scares you, then you are definitely not alone. Investing in shares is one of the most popular ways to build wealth, but for the people who don't really know what they're doing or have limited experience with investing, it can be extremely overwhelming when trying to get your foot in the door. If you have now started doing research to get a better understanding of what shares are and how they're traded, hopefully this video can provide a little bit of clarity and insight to assist you on your journey. Let's begin. Welcome back to my channel. My name is Reese. In today's video, I'm going to be talking about what stock exchanges are, and I'm going to give a little bit of a brief background on a few of them. As a simple overview, stock exchanges are designed to allow investors to buy and sell shares of companies who are listed on those exchanges. Company shares listed on these exchanges can be traded either physically at a physical location depending on the exchange, or digitally, which is more common as digital trading now dominates the way shares change ownership. So now how do they work? When businesses or companies want to raise capital to invest in themselves, to build factories and facilities which can provide more profit to that company, they do something called issuing shares. And basically the people who take on these shares, the people who buy them or the people who receive these shares, at some point may want to sell their stake in the business or the company. And how do they do this? Through a stock exchange. Without a stock exchange being the platform where people can trade these shares, basically the owners who want to relieve themselves of that portion of the company or who want to sell their shares would need to go to friends, family, or even the local community, which would be really difficult to entice or convince people to buy the shares from that company. Whereas a stock exchange, like I said, is designed for anyone, the average Joe, to come along and be able to buy shares from anywhere in the world, because the people who are wanting to buy the shares in that company are the people who are going to use this platform. Therefore, there is a direct market for the person who is trying to sell their shares, because you have both someone who's interested in selling their shares and someone who's interested in buying their shares. Therefore, the stock exchange is the meeting point where they can do this trade and it all be legit and it all be regulated and everyone wins. Through the means of using a stock exchange as well, you will never know the person at the other end of the deal. It could be an 18-year-old kid on your street or a billionaire from the other side of the world. Ultimately, it provides anonymity, which is great as well, because you don't actually have to deal with someone directly to try and convince them to sell you their stake in a company at a lower rate. It's all regulated and it's all set up in a way that tells you the price then and there. Now, going a little bit more in depth, a stock exchange is very much like a live auction house where traders who believe a company will do well bid the price of that stock up, and vice versa. When they believe it won't do as well, they bid it down. Now, in simple terms, by applying a bit of common sense, you can figure out how the trades generally go. A buyer is going to want to buy shares at the cheapest possible price, whilst on the other hand, a seller is going to want to sell their shares for the most money they possibly can get. Now, companies listed on stock exchanges will generally fit into one of many categories that are listed on the exchanges. They include things like energy, materials, industrials, healthcare, financials, information technology, communication services, utilities, and real estate. In this video specifically, I'm going to be mentioning 3 stock exchanges that I just want to give a bit of a background on just for information purposes. They are the NASDAQ, the New York Stock Exchange, and the ASX. Let's start with NASDAQ. NASDAQ stands for the National Association of Securities Dealers Automated Quotations. It was the first electronic exchange allowing investors to trade shares digitally without the requirement or need for a trading floor. The NASDAQ attracts some of the largest blue chip companies from around the world. And just to clarify, a blue chip company is nationally recognized, well established, and financially sound. And the reason why I've decided to include it in this video is because based on its market capitalization, it is the second largest stock exchange in the world, and it's based in New York, which leads into what the world's largest stock exchange is, which is the New York Stock Exchange, again, based on market capitalization. It provides a marketplace for buying and selling millions of corporate stocks and securities every day, and it lists some of the world's largest companies. The New York Stock Exchange also uses 2 methods of trade, one being brokers and the other being all electronic. Regardless of the method of trading, at the New York Stock Exchange, all stock transactions are an auction. Brokers actively trade stocks both digitally and on the floor in the physical location in New York. The New York Stock Exchange being the largest stock exchange in the world is not the only reason why it's made my list. The other reason why is because there is a tradition at the New York Stock Exchange where during trading days, trading starts at 9:30 a.m. That's when the bell rings, and then it rings again for closing at 4:30. And this tradition has been held up since 1870, which is insane. 150 years ago is when that tradition started, and it's still going strong to this day. And finally, as I live in Australia and actually use this stock exchange, I figured I should mention the ASX, which is the Australian Stock Exchange. It provides a regulated environment for companies and investors of all shapes and sizes to trade. There are approximately 2,200 companies listed for trading on the ASX, starting all the way down at small startup companies, leading up all the way to well-established large corporations. The ASX is the 8th largest share market in the world, and it categorizes the companies listed on it in a similar fashion to the list I provided earlier in the video. So as a recap, a stock exchange is where investors and companies can buy and sell and trade stocks freely. They exist in both a physical and digital format, allowing people to physically make trades as well as electronically. Companies can use stock exchanges to raise capital for their companies by selling equity in their company in the format of issuing shares. And trading can take place anywhere in the world. So I myself from Australia have a method to be able to buy stocks that are listed on different stock exchanges from around the world. And this term is known as globalization. In reality, investing in the share market comes with its own risks, but when you apply discipline and you learn and do your research and really start getting into it, it is one of the most proven ways to build wealth over time. And good on you for taking steps to get a better understanding of what exchanges are listed out there, what brokers are, how trading works, what shares are. All of this information is relevant. It's important to understand, especially if you're someone who's definitely going to or has already started investing in the share market, because having an understanding is only going to put you in a better position when you're doing it. Understanding what you're buying, where you're trading, how you're trading. There's so much information out there, and like I said, good on you for taking the steps to seek that information. With that being said, I hope you did learn something in today's video. I hope you enjoyed it. I hope that it was insightful. If it was, please consider liking and subscribing. And as always, I will see you in the next one.